Welcome to Investment 360. Joining us now, Mark Casey from Deloitte, and we're looking at several scenarios of the impact of a Eurozone breakup on the South African corporate sector. Mark, good having you on the show. As you say, it's no longer about a recession in the Eurozone, but how deep that recession is going to be and perhaps how long it's going to be. Let's start there and then talk about the implications for the South African corporate sector.
Thanks, Bronwyn. It's great to be back on the show. You know, a few years ago, the black swan theory was promoted around the world, and it was seen as something that was sat on the extreme of a distribution curve, and it was a rare event. And in the last couple of years, all that we've seen is just a continuous series of black swans. It almost bucks the trend. I actually looked it up in Wikipedia this morning. The collective term for a swan is a bevy. So we've had a bevy of black swans. and I think all that's really happened is we've just become used to a sequence of seismic shocks to the corporate world that if you're a board member right now, this is a difficult time. I mean, you know, no one's asking a board member to be a soothsayer, because most of them must be sitting there thinking, you know, what do I do? What do I tell the shareholders? How do I discharge my responsibilities properly? Because I don't know what's going to happen tomorrow. Who does? And then you look at the Eurozone crisis, and if you're a South African corporate and you're sitting on the board of a South African corporate and you're thinking to yourself, now, what's going to happen next? Which countries are going to stay in the EU? Which countries aren't? Which ones are really going to uncover some more perhaps difficulties and challenges than have been discussed at EU levels with the policymakers? And as a result of that, what's it going to mean for the business? What's it going to mean to our assets that sit in Europe? Our cash that sits in Europe? How are we going to protect it? Perhaps if there is an expulsion of a member country or a UDI, where a country decides just to leave the EU.
Are we seeing a wait-and-see attitude from South African corporates right now? We know that they've got so much money on balance sheet. They haven't been employing that cash. So these are war chests that stand in the offing. What is the response that you're gauging from South African corporates?
It's such an interesting point you raise, because behind every threat there's, of course, an opportunity. And clearly, you know, asset prices are depressed. You know, interest rates are high in Europe, particularly on the government bond levels. You know, the sentiment is depressed. There is just an expected protracted recession in Europe. So there could be some nice buys for South African corporates for sure. But right now, you know, you've got to protect what you've got. And I think shareholders would be demanding that board members have thought through what are the risks to our assets in Europe, to our trading abilities in Europe. You know, what are the alternatives? Have you, as a board member and a board, thought about these scenarios, and what has been your response?
Well, the other thing it comes down to is price. I mean, if you can buy a good business in Europe on a 2PE, then certainly it makes it attractive, especially given that Europe has basically been in a muddle-through economy since 2009. So these earnings are relatively depressed when you compare it to 2005, 2006.
So are you throwing forward to potential acquisitions? You're saying corporates should be buying?
Should corporates not actually be saying, look, these are relatively depressed earnings, they're on low PEs, this is an attractive time.
This is an opportunity.
And you are. You're right, there are opportunities. However, let's say there's an expulsion, let's say there's a UDI by one of the member states, and now they introduce exchange control to try and shore up reserves, to try and stem the flow of cash out of their banks and out of their country. Now, yes, you buy an asset, but now there's an overhang. You know, what are you going to do about that? Well, the rule of law can change.
I take your point, but for someone to leave the Eurozone, that unwind is going to take at least 5 to 8 years. And that's an optimistic view.
Is that a reality?
And I don't think it's going to happen. There won't be an expulsion. I think there'll always be an accommodation.
Never say never. You know, you're going to wake up and watch those newspapers tomorrow morning.
I think you're right. The extract at all levels will take a number of years, but the cash could disappear in a matter of days.
The situation in the Eurozone, too little, too late. Is that how you would qualify it?
Yeah, I think the EU has perhaps not acted quite as quickly as we know the US did, as we know the Chinese have done. And I think right now you're sitting with a situation where the damage has been done, where the depression has set in, where you know, the UK's lack of support for the EU is clearly, you know, not a vote of confidence in the EU, and it's a worrying factor for not just EU member states, but for the global economy. The EU is the third largest economic group in the world.
Well, let's put this question to you. If the Eurozone now sees a protracted, deep recession, what are the implications for the likes of the US? Are we going to see the US thrown back into recession just because of the interlinkedness of the countries?
Absolutely. You know, the EU, China and the US, if there's problems in any of those territories, one impacts the other. Perhaps not quite to the same degree with China, because they have developed their domestic economy that acts as to some degree as a buffer.
That internal consumption.
Yeah. But if the EU suffers really badly, the US will be impacted, there is no doubt.
So, you know, your view is then still wait and see what happens with corporates in Europe before one even goes and puts capital in it.
Except that a board of directors in South Africa should be contemplating the scenarios that could unfold and figuring out, are they doing enough to protect the interests of their shareholders, to protect the interests of their people, safeguarding their assets, managing their cash. And I think also having a communication strategy. What are you going to tell your shareholders? You can't at an AGM, when the share price has tanked, when the assets have fallen dramatically, say to the shareholders, we just didn't see it coming anymore. I think there's more preparedness needs to be built in to boards' operations.
I mean, the one opportunity that one sees in the UK, for example, is, especially with the introduction of austerity, etc., is within property. You know, one can borrow 70% of the cash from a bank, put down 30%. And even if you borrowed 100%, you're getting a positive carry of 4%. So that's a real return. So to my mind, you know, those are opportunities which I think a lot of corporates are missing out on.
Exactly. And those sort of opportunities are going to be determined from a proper, thought-through, strategic risk management process. And I just wonder how many South African corporates are doing that now. You've
painted a worst-case scenario here for the Eurozone. Do you have any idea whether captains of industry in South Africa are looking to a worst-case scenario, or are they leaning to the likes of an Ashraf saying there is going to be resolution in the Eurozone, we're not going to see the breakup of the euro, it's just going to take a matter of time for them to muddle through, but they will come through with a definitive and positive result?
I think there's a natural human behavior to have a bias, a cognitive bias towards optimism, a sense of, I'm sure these guys will work it out, I'm sure that they'll get through it. The money will come from the EU, that they'll find a way to resolve things. I think that sort of optimism can be misplaced. We've seen too many disasters around the world, financial disasters, where, you know, we thought Lehman's would be bailed out. We thought actions would occur which didn't occur. Why do we believe that the EU is just suddenly going to sort itself out?
Why do you believe that the EU is going to sort itself out, Ashraf?
Because I think ultimately for the Germans, it's going to hurt them more than they're currently admitting to. So, you know, even though Angela Merkel said no further accommodation in terms of the permanent fund, I think 6 to 9 months down the line, there will be the accommodation. So call me the eternal optimist, but
you're a glass half full rather than a glass empty.
Absolutely.
We need people like you in this world.
You know, Bronwyn, it goes back to the gold argument, and that's probably where I'm hedging my bets, is the worst case scenario arrives, gold shares are going to rise.
Looking at the Eurozone, how quickly do you expect the situation to unfold from this point on? You know, we've got the Christmas, the festive season. Do you think that this is all going to implode over December, or do traders get back to their desks, corporate captains of industry get back to their desks in the new year and have to face another tirade of negative news flow out of the EU?
I think something is going to happen in months. It's not going to happen in days. I think the 17 members of the Eurozone, that will not remain intact. There will be a casualty there. You cannot stand back and expect that business as usual and the structures that exist in the past are just going to continue into the future and all will be well. I think that's naive. I think there's going to be some casualties. I don't know who. It'll be very hard to say whether that's a forced exit or whether that's a UDI, but something's going to happen, and I think we need to be managing that sort of scenario.
I keep asking everybody at this stage, are they comfortable going on holiday? Are you going on holiday?
Absolutely.
And you're going to face the music when you come back, if there is any music to face. In your book, there won't be any.
I don't think there's any significant music to face at this point in time, unless we see a substantial bankruptcy within the Eurozone. You know, Lehman's was mentioned, but Hank Paulson said after the Lehman's disaster, it was one of his big mistakes. So I don't think Europe is going to make that mistake. We saw the bailout of Dexia, and that could very well have been the Lehman's and taken us back into a 2008
And just reminding you that Dexia was at the top of the European bank stress tests in terms of being given the thumbs up. Just want to put that fact on the table.
Absolutely, absolutely.
The rand and the implications if we do see the Eurozone imploding, if we see the breakup of the euro, etc., etc. Do you think that captains of industry have given enough attention to that possibility and the currency implications for their businesses?
I think it's more about the counterparty risk, like other country, perhaps the other currencies that will emerge, or the old ones that get dusted off out of the cupboard and reintroduced, and perhaps how, for South African corporates trading in those countries, those new currencies, how you manage that is going to be very interesting. It's certainly, from a currency trader's point of view, it's going to be an absolute dream in the next 18 months. It really is.
Well, let's regroup in January and take this discussion one step further. Mark, appreciate your time.
Thanks,
Mark
Bronwyn.
Casey from Deloitte.